All right, we are live. Now, you guys might say, oh, Mitt, you're late. It's your fault. It's not my fault, okay? It's not my fault. The reason it's not my fault, I wasn't sleeping. I was coming back. I was driving back. There was a school bus in front of me, and this damn school bus was so slow in front of me. And I'm just here wondering while I'm sitting behind this school bus in traffic. Why is there still school in June? No one's doing anything in June. Literally, these kids are going to school and they're doing nothing in June. I remember when I was in school in June. In fact, in the month of June, I think I skipped school the entire month, dude. I did not go to school. People thought I went to school, but I didn't end up going to school. So me and my friends had some fun those days. But I don't know why school is even a thing in June. Regardless, that's why I'm late. It's not my fault. Okay, you might think that's an excuse. It's not an excuse. It's the school bus. Those fucking kids that shouldn't be in school, they should be home because they're not going to do anything in school anyway. Anyway, we've got CPI in 3 minutes, and we've got a lot to talk about when it comes with CPI. This is going to be one of the most monumental CPI reports we get, I think, the entire year. I say that every single CPI, but still, it's important, dude. It's the entire. It's one of the most important things ever. I'll pull it up right now so we have it, because if this thing comes in hotter than expected, we're screwed. If this thing comes in line, we're not screwed, but it's not really going down, and the market will still like it, but the market won't love it. If this thing comes in lower than 3.4, which is what the market's expecting right now, it's going to be a really fun day. I kind of feel, and maybe I'm too bullish here, but I kind of think we come in at 3.3. This is what all the banks say. They say 3.4. Some of them say 3.5, but the sort of median consensus is 3.4. I kind of think maybe it's 3.3. Now, my logic for that is that I think oil was down substantially. I think shelter is going to start to come down. Those are more than 50% of CPI, shelter and oil. And I think used car prices, new car prices, insurance, et cetera, will come down. I'm probably wrong because these banks understand it better than me. And if we at least get 3.4, things will be okay. It doesn't really signal that we should be cutting rates if we're only at 3.4. If we come in below 3.4, I think the rate cuts are back on the table. Granted, I still think we're going to cut rates even if we have 3.4. If we come in at 3.5, that's not going to be good. That's not going to be good at all. So we've got about 2 minutes until it officially goes live, and we will see what this ends up turning out to be. Were there kids on the school bus? Yes, there were kids on the school bus. But my point is, why are kids on a school bus in June, dude? I remember going to school in June. A lot of times I didn't go to school in June, and most of the time, no one did any work, even though we had school. So to me, June school is ridiculous. It's just a formality at this point. All right, here we go. We got about a minute left, and we'll see what we got. The website to see CPI, let me put it in the chat. Also, the GameStop news that broke over the last 24 hours. Insanity. We've got a lot to cover when it comes to GameStop. So we'll be talking about GameStop a lot after we get the CPI news. But in about 2 seconds, we're going to see what happens. Also, yes, S&P 500 all-time high in the pre-markets, 537. I'll be keeping an eye on at 537.64. So I'll keep an eye on the S&P before we even dive deeper into CPI, because that's going to determine a lot of what's happening. And we'll see what it looks like. Okay, 8:30. Here we go. 8:30. It is time. What do we have as the answer? Let's see. 540. Holy crap. Oh my God. We're at 540 on the S&P. Oh my God. The answer. Wait, I don't have it yet. I'm refreshing. It hasn't come out yet. Wow. It has to be good. 540 on the S&P. It has to be good. As you can see, I'm refreshing my screen. I don't see it here. You guys got 3.4. This is the old one, right? This is the new one. Here we go. All right, we got it. 3.3. 3.3. Oh my God. 3.3. Oh my goodness. It's 3.3. It's 3.3. Over the last 12 months, the all items index increased 3.3. Let's freaking go. 3.3. All the banks were wrong. Every single bank was wrong. They said 3.4. It was 3.3. 3.3. 3, baby. S&P 541. Holy crap. Robinhood's 23.75. Robinhood's 23.75. Hims is 22.49. Snowflake's at 130. S&P 541. Oh my goodness. Palantir 24.25. Oh my gosh. GameStop's at 31.28. Oracle's up 8%. They had a good earnings. Apple is down a little bit. Apple had a good day yesterday, so they're going to be down. PayPal 65. Amazon 188. Celsius is up 1%. Bitcoin is almost at 69,000. More liquidity is good for Bitcoin. Let's go, baby. 3.3. 3.3. Now, when we looked at the bank projections on the market close and this morning, literally 3 minutes ago, the reason I said I think we get 3.3, and my only thesis, and we're about to look at it right now, is because oil and shelter I thought would come down in the month of May. Maybe that's going to be the reasoning as we go through it, but that's why I felt 3.4 was a little too conservative. Also, I did say this on the market close yesterday. I kind of felt like the banks worked together to give a conservative CPI projection so that if it did come in lower, which they kind of all knew it would come in lower, that would be good for markets. And so I kind of felt they were being a little extra conservative because they didn't want to mess up the rally by saying, oh, we're going to get 3.2, and then it comes out at 3.3. The market is all about perceptions and versus reality, right? And so the perception is that inflation is coming down, given the expectation was 3.4, but we got to freaking 3.3. S&P 500, 541, up almost 1% on the day. Robinhood, 23.78. All right, let's go through the report. SoFi, 721. That is correct. SoFi above 7. And that's also, I mean, again, more liquidity or rates going down means more liquidity, means better conditions for lending for SoFi. So that's also very important. All right, let's go through the report. Let's go. Actually, hold on. I got to tweet it. I got to tweet this. Okay, hold on. Let's do the tweet first. Okay. Breaking. CPI comes in at 3.3% below expectations. Let's do versus expectations of 3.4%. You guys see this, right? So whenever we do a CPI tweet, we got to have a Jerome Powell picture. Okay, so let me get a Jerome Powell. Oh my goodness, dude. 3.3, bro. 3.3. 3.3. Okay, let's do this one. This is the Jerome Powell picture. 3.3, guys. 3.3. Every bank said 3.4. We got 3.3. Then we're going to tag SPY QQQ IWM. Okay, here we go. CPI comes in at, all right, boom, post. Okay, so let's get into this. More than offsetting a decline in gasoline, the index for shelter rose in May, up 0.4% for the fourth consecutive month. Okay, so shelter was up. I think the rate of growth on shelter might have been down, but we're going to look at deeper into that. So shelter was up. The index for food increased 0.1% in May. The food away from home index rose 0.4%, while the food at home index was unchanged. The energy index fell 2% over the month, led by a 3.6% decrease in gas. So basically energy, which is what we were looking at every single day. We saw oil was below $80, $76, $77 for the majority of May. That is what contributed to the decline from 3.4 to 3.3 month over month. So shelter was still up, oil was down. And it seems like oil was the sort of core reason for what we saw. The index for all items less food and energy rose 0.2% in May after rising 0.3% the preceding month. Indexes which increased in May include shelter, medical care, used car and trucks, and education. Wow, used cars and trucks went up. That's annoying, dude. That was down 4 months in a row. That one went up. Airline fares, new vehicles, communication, recreation, apparel were among that decrease. Okay, so airline fares went down. I bought a lot of airlines or a lot of airplane tickets in May. So, and they relatively weren't that expensive. I mean, they were, average $250, $280. So it wasn't horrible. New vehicles went down, communication went down, and apparel went down. Okay. The all items index rose 3.3% for the 12 months ending May, a smaller increase than the 3.4% for the 12 months ending April. The all items less food and energy rose 3.4% over the last 12 months. Okay. Let's get deeper into some of this stuff. The food at home index rose 1% over the past 12 months. Index for meat, poultry, and fish rose 2.4% over the past 12 months. So eggs, meat are still expensive. Index for cereal and bakery products rose 0.7%. Dairy and related products fell 1%. Energy fell 2% in May after rising 1.1% in April. The gasoline index decreased 3.6% in May. We did have lower gas prices. The natural gas index decreased 0.8% over the month, and the fuel oil index decreased 0.4%. The energy index increased 3.7% over the past 12 months. The gasoline index rose 2.2%, and the electricity index increased 5.9% over 12 months. This index for natural gas increased 0.2%. So again, year over year, they're up. Month over month, they're down. Medical care is up 0.5%. Drugs rose 2.1%. Prescription drugs. This is why that Hims GLP news is so important, because if they're giving you Ozempic at a cheaper cost, then it's just cheaper to get drugs from a company like Hims versus getting it from a prescription. Used car and trucks rose 0.6% in May, following a 1.4% decrease in April. Does anyone have an idea why? Why do you think in May the used cars and trucks index rose after coming down in April? I think it was down in March and February as well. I'm not sure why why in May did used cars go up? Did people get tax refunds and they all started to buy used cars, and that led to more demand with less supply? The index for airline fares fell 3.6%, following a 0.8% decrease in. Wow, look at that. So in April, airline tickets fell about 1%. In May, they fell almost 4%. Huh. Wow. Over the month, the new vehicles index fell 0.5%. That means people weren't buying as many cars, so companies were able to lower those prices, which is good. So it seems like people are going to used cars versus new cars. The communication index decreased 0.3%, and the recreation index declined 0.2%. Okay, let's go to CNBC. Let's see what they have to say. Then we'll keep going.
There is no alchemy to interest rates. And to think that flip-flopping and lowering rates after 8 years of zero, we're going to pay a price. There's no free lunches. You squeeze that water balloon and lower rates, you're going to create issues in other areas. Not a good idea.
Rick, could you give us 2 minutes to enjoy the lower inflation, Rick? Just 2 minutes. Come on. I get you. Everything you say is right.
Goldilocks.
Robinhood is $24 in the pre-markets.
Give us a little time to kind of say, hey, we're not going off here on inflation.
We're talking markets here, real money.
Well, Wendy, let's bring in Wendy on this. Wendy, you said that even if this was a good number, better than had been anticipated, it would still not clear the way for the Fed to cut rates. Is the market getting ahead of itself? You've now got Dow futures up by more than 250 points. You saw the steep drop off 11 or 12 points in basis points when it comes to what you're watching with the 10-year yield.
I think the September rate cut is still on the table. But generally speaking, the economy has been remarkably resilient in the face of what we thought was tight monetary policy. But the alternative is maybe monetary policy is not as tight as we think it is. For monetary policy to be...
It seems like the market's reacting to this. We'll get back to CNBC and get some of their opinions in a second, but just looking at some of these equities, Robinhood right here, $23.99, it's up 3.32%. S&P is at 541. Dude, freaking Tom Lee said there's a chance the S&P hits 550 this month, in June in particular. I mean, if the inflation comes down, which it looks like it is, then 550 doesn't sound that crazy, because now what are the catalysts left in the month? We have an FOMC meeting today. I'll be live at 2:30. Jerome Powell's probably going to say, hey, inflation's coming down. We're happy with the progress. We're not going to cut rates soon, but we're getting ready to cut rates. That's all the market needs to price this in. Where's Enphase? Enphase must be benefiting from this. Yep, 137 on Enphase. Congrats to those who have Enphase, 137, incredible. I mean, I don't have Enphase. I didn't buy the dip on Enphase, but whoever likes Enphase, you had basically a year to buy the dip. And so if you got the dip on Enphase, then congrats, because rates come down, Enphase goes up, companies that are rate sensitive go up. And so below 100 or $100 average for Enphase is great if you have that. Let's look at Tesla. Tesla 172. So Tesla's up about 1%. I think the uncertainty of that vote, which I think is going to get passed, but again, I could be wrong, in favor of Elon. I'm going to be live streaming that tomorrow. I think it's at 4 p.m. We'll be streaming that. So we'll see what happens with that. But otherwise, Tesla would be up even more, because lower rates are technically more good for Tesla. So I think that should help Tesla. But right now, nothing on that for Tesla. Palantir, $24.20 freaking cents. 24, baby. It's at 24. We had a lot of time to buy the dip from 20 to 21 or even 22. I think we had the whole month of May after that 25% drop from earnings. So for those who bought the dip, congrats. There was plenty of time to get into the dip, and rates coming down, that helps it. Now, granted, I think Palantir still has to grow into this valuation and they have to put up good numbers in their earnings, but rates coming down definitely. And again, rates aren't down yet, but the expectation that rates will come down helps their business. Robinhood right here, $24.06 in the pre-market. Real quick, their numbers yesterday, I'll talk more about it later. They were pretty damn amazing. 120,000 accounts, 3.6 billion in deposits. By the way, guys, the 1% match is live completely. The 1% match is live. SoFi right here is up as well. SoFi 717. So that 1% match, Oracle right here up 6.8%. That's giving you 1% on every dollar. My sister, I finally convinced her yesterday, and I didn't really have to convince her. I was just sitting down and she randomly came up to me. She started talking about money. I was like, wow, my sister's asking me about money? That's incredible. My sister usually doesn't ask me about money, but she started asking me about money. Maybe she starts watching my streams. That's probably a lie. She never watched my streams. And she was asking me about Robinhood, and she was asking me about like putting money into her account, blah, blah, blah. And I was like, Didi, because in India, you call your bigger sister Didi. I was like, Didi, for the past year, I've been trying to get you to take your money out of Bank of America and just collect 5% in Robinhood. That's all you have to do is put it in there. And she finally was like, you know what? Let's do it. And she sat down with me for 10 minutes and we transferred 30 grand from her Bank of America into Robinhood, and she got $300 as a bonus. And when she saw that 1% bonus, she's like, I get $300 just for doing this. I was like, yep. And you get 5% on that $300, and you get 5% on the $30,000 you just put into Robinhood because you're a gold member. So, I mean, dude, like I think percent match is definitely going to influence a lot of people to end up signing up. Robinhood right here, $24.08. Apple right here is down because Apple had an incredible day, 207. We'll talk more about that. Where's GameStop? GameStop is at $31.42. I have a lot to talk about on GameStop as well. If you are just joining, CPI came in lower than expectations. QQQ 472, new all-time high on the NASDAQ. S&P 500, new all-time high at $541. Incredible. She has to keep the 30,000 there. Yeah, that's true. But like, again, and the one thing I didn't like about the 1% match is that it's paid over 24 months, but I kind of did like that. So for example, if you put in $1 million, right, and you get 10,000 divided by 24, because that'll be your bonus paid out over 24 months, you get $416, kind of like a passive income that's just dropped into your bank account. Now, would it be amazing to have the 10,000 all at once? Yes. Would it be amazing if she got $300 yesterday? Yes. But if anything, if you're not taking that money out of Robinhood, which you shouldn't, right? And it's good on Robinhood to incentivize you to keep the money to Robinhood because you should be investing it. Then every month you just get a little check from Robinhood. And let me actually show you guys what the UI looks like. And then if the money's in Robinhood, then you don't need to worry about like the money ever leaving because it's just coming every single month. Also, the thing I was going to say is it helps Robinhood in their expenses. It helps them in their expenses because now they don't have to pay you like $10,000 immediately. They can amortize it over the 24 months. So this is what it looks like, guys. Let me just show you real quick. This is what it looks like. So I put in like $150 yesterday. This is what it looks like. So my upcoming payouts every single month, I get 8 cents, which is not bad, right? But the point is, obviously, when I put in more money, that will go higher. But basically, every month I get a little check from Robinhood which is a thank you for putting my money into their platform. And 7 cents doesn't seem like a lot, but when you put in some real money, and I'm going to be putting in more money, it's a lot of money that adds up. So not bad at all. Can I withdraw my buying power and just put it back in? Yes. Right now, I think if you withdraw your buying power, if you haven't done anything with a 1% match and put it back in, you will qualify for the 1% match if you haven't already deposited anything for the 1% match. Okay, let's go back to CNBC. Let's see what they're saying. And then we got a lot of stuff to cover outside of CPI. If you're just joining, 3.3, that is the headline.
Some of the fiscal pressure is taken up. And I just kind of like a little move here, a little move there. To me, what it looks like is that we're stuck. We're stuck. And, and I just I'm disappointed that no one talks about the role of the fiscal side and all this, but I was very happy to hear Wendy mention it.
Okay, so the fiscal side of things, meaning that the debt that we've taken on and also the spending, Wendy, that is taking place at this point, it really isn't something the Fed can do about itself.
And the borrowing.
And the borrowing.
The interest payments. Right? I mean, this is one of the things that have changed dramatically since the Fed started fighting inflation because of interest rates going up, and because so much of our debt is short term. A third of the debt is a maturity of less than a year. So basically, the weight of higher interest rates is felt almost immediately, and you see it in the deficit numbers, you see it in the interest payment really exploding, and this is making the job of the Fed much harder.
Veronique, let me ask you what would happen. Joe threw this out kind of as a joke, but...
Let me go to Bloomberg as well and see what they're saying, and then we'll go back to this.
Conviction of your trade or the balance of risks or how much leverage you're putting onto it as opposed to the trade itself.
What could Jay Powell say today, Francis, that would really move the needle in your book?
Well, he could speak to some of his longer term concerns that aren't inflation or jobs. For example, well, he can't do it, but interest costs for the federal government are very high. They're about 19% of revenue is going towards interest costs. If he were to talk about, and he probably wouldn't, some of the risks of higher for longer, that would move the dial. But we have 3 more inflation reports, 3 more of just about everything until we get to September. The Fed is in a holding period. The market is in a holding period. And each individual data point, each individual Fed commentary will be far less important than the sum of all of their parts. So,
okay, let's take a look at some of the pre-markets. Then we're going to give a call to Chris and get his perspective on all of this. So again, the pre-markets are up right now, 540 on the S&P. NVIDIA, we forgot to look at NVIDIA. NVIDIA's up 2% or 1.8%, 123 on NVIDIA. By the way, someone who's going to join the market close stream today ended up buying NVIDIA yesterday. They initiated their position in NVIDIA for the first time. So they will join the market open stream, or sorry, market close today. And we'll talk to them. SoFi, 723. SoFi is up 3%. Really nice to see SoFi up today. Again, lending does well in a low interest rate environment. There's more liquidity, so that's great for SoFi. Nice to see SoFi up 3% on the day. Robinhood up 3.3%, $24.07 right now. HIMS, $22.87. DJT is up 1.6%. Enphase is up 4%. GameStop up 1.25%. S&P at 540. All right, let's give a call to Chris and let's see what he has to say about this inflation read. And then we're going to talk all about GameStop and go deeper into what's happening there. Jay Powell's at 2:30. Jay Powell's at 2:30. So I'll be live at 2:25 and we'll be covering it live.
Hey, Amit, what's going on?
Chris Patel, CPI numbers 3.3 versus 3.4. What were your raw thoughts as you saw these numbers?
I mean, it's great. I mean, at this point, it's giving Jerome Powell every reason to start cutting sometime this year. I mean, the only question is it going to be 3 or is it going to be 2 or is it going to be 1? The one problem that I do see happening, which is going to be one of those things that forces the Fed's hand, believe it or not, is we're creating a bifurcated system right now with this high interest rate environment. And the way the best I can explain it is, you know, there's people out there who have homes, who have low interest rate mortgages. You know, the higher inflation that's happening, it's not impacting them that much because a lot of their fixed costs, which is coming from housing, are pretty much secure. The people that are really getting impacted by interest rates are the people at the bottom. So what's happening is as inflation stays higher, the bottom people, they don't own assets, you know, and they're basically living paycheck to paycheck. And without the access to cheap credit, they're essentially now just forced to be under this high interest rate regime. So the high interest rates actually benefit people who have assets. So not only, you know, right now, if you just look at the treasury market, there's a bunch of boomers right now with $1 million sitting in their 401k getting a 5-6% return from treasuries without taking any risk whatsoever. They're living their good life. They already have their house paid off. So I think what's happening is that you're seeing two different things happen in the market where you're seeing some sectors, they're doing really well because they cater towards this higher end client. But then you have like the bottom end of the client getting completely screwed over.
So do you think that means that rates got to get cut to like reconcile that bifurcation you're talking about?
Yeah, it's actually starting to happen. I think one of the economists, that Mark Zandi, came out and he put it out there that the higher interest rates are keeping home prices elevated because what's essentially happening is there's a lack of inventory because people are not moving out of their current situations. They can't. Even if they wanted to, let's say, downsize, they would end up paying more in the new interest rate.
Right.
So it's basically frozen the housing market. I mean, I freaking hate Elizabeth Warren to death, but even she came out with a letter today.
Dude, that was hilarious. So she basically said, did you read the letter? I'm going to pull it up right now. But,
yeah, I did.
Okay, what'd she say in the letter?
She basically just outlined the same thing that like right now, higher interest rates are basically keeping home prices higher, which is what I was saying. But the thing is, she's not supposed to say that. You are not supposed to try to influence. You're a fucking sitting politician. Like they went after Trump for saying some stuff like that. So you shouldn't fucking be saying the same thing, even though I agree with her, to be honest with you.
Right here. She's saying the Fed's current interest rate policy is also having the opposite of its intended effect. It is driving up housing and auto insurance costs. We saw that in the CPI today, which are currently the main drivers of the overall inflation rate. Excluding shelter, overall PCE only would have increased by 1.8%, which is below the Fed's target. So her argument is basically rates high is creating the bifurcated effect that's leading to this problem. So you're saying she's right, but she's not supposed to be saying it, basically.
Yeah, basically. I mean, well, or at least don't call Trump out for saying something when he said it, and then at the same time, you say it now.
Yeah,
you know what I mean? You're not like as a politician, you're supposed to, not try to influence the Fed's decision and put pressure on Jerome Powell via this jawboning. But all in all, I do think that the Fed has every reason to begin cuts in July. Is it going to happen? I have no clue. I think.
Why July before September?
Well, for one thing, you want to not let the Europeans and the Canadians get too far ahead of your rate cutting cycle. Otherwise, what you're essentially going to be doing is screwing over the capital markets, where people are basically, you're going to have like a two-tiered system where the Europeans and the Canadians. A lot of their money is becoming cheaper, which means that now your exports are going to become more expensive, where your imports are going to become cheaper. And that might end up causing some level of recession, because now you have goods and services kind of getting screwed up a little bit. So the thing is, we want to make sure that our GDP is growing, that we don't put ourselves into a recession. And so we have to kind of I wouldn't say join them right away, but we have to keep up some level of parity with what they're doing. So
right. All right, Chris, makes a lot of sense. Thank you for joining.
The one thing I'll just say really quickly is the one thing to keep an eye on today when it comes to Jerome Powell's comments is going to be centered around the Fed's policy response to Canada and the ECB cutting. And then the European, the England, the BOE is actually about to cut as well, probably by the end of this month. I don't know if you know that. So a lot of what we're seeing is the G7 countries are getting their inflation under control, which means the US is lagging. And at the same time, now, how is the Fed's policy response going to be? If he comes out and says, they can do whatever they want, our goal is 2%, fuck the rest of the world, that's something to consider. And there's also something to say, worldwide inflation is starting to dissipate. We're seeing, a lot of the transitory effects that happened during the Russian invasion. All of those things are dissipating around the globe. That's a good sign, because that means that they're more likely to cut. So I'd say just keep an eye on his commentary about the other central banks.
Right.
Rather than trying to focus more on what his policy decision is.
Right, because a lot of that is ultimately going to be implicated from a global perspective versus just because we already know the problems of the United States, but he's going to have to address what's happening across the world.
Yep.
All right. Makes sense, guys. Man. Chris's Twitter in the description. Please make sure to follow him there. We'll be talking a lot more with him in terms of what happens after the FOMC meeting. But Chris, you think they're going to hold rates today, I imagine, and just signal to be more dovish?
Today is definitely a hold day, in which case I think what the Europeans did this time was they cut, but they had a hawkish cut. Powell is going to do the exact opposite, where he's going to say, we're pausing, but it's a bullish pause.
Got it. Yeah.
So,
yeah.
All right. Have a good one.
All right. Thanks, Chris. We'll talk later. Okay, guys. Artish here. Thank you for the $10 super chat. Really appreciate it. Thank you, sir, for that $10 super chat. CPI, guys, 3.3%. All the banks said 3.4. We ended up getting 3.3. So this is what we got going on in the pre-markets. 541, absolutely incredible for the S&P. GameStop is dumping in the pre-markets for some reason. So I think we transition a little bit to GameStop. Let's talk for the next 5 minutes on what the hell is going on with GameStop, and then we'll go back into the broader markets. Adam says, what happened to Derek Wall? Derek is doing good. I was just talking to him yesterday. He's doing good. He's going through a little bit of health stuff, but he's doing all right. And he's actually working on some exciting stuff. Unfortunately, health is getting to him a little bit right now. He's working through his issues, but he's He's gonna be on the he's gonna be on the up and coming. He just has to get through some of the health stuff. We still have our VC fund open. In fact, we were going through a couple of deals yesterday. So emitderekfund@gmail.com. Let me put it again in the chat. If you have any cool $1 billion ideas that you want funding for, or want the potential to get funding for, that is the email. Please make sure to email it. I haven't talked about it a lot because again, his health has just not been the best over the past couple of weeks, and he's been dealing with that. But that fund is still open. So if you want to send something, send something. And we got a really good deal last night. It was a really, really interesting deal. Ironically, it's in the crypto space. And Derek and I both aren't the most excited about crypto, but it was a hell of an idea. So yeah, if you have any ideas, please make sure to send. Okay, so GameStop, $29.88 on GameStop. Let's talk about GameStop right now. We'll also talk about the Bitcoin miners because, oh my God, how did I forgot? Trump met with the CleanSpark CEO, or the CleanSpark chairman yesterday. The guy who I did a podcast with, Matt Schultz, like 2 years ago, Trump met with him yesterday, and Trump was like, yes, we need Bitcoin miners. Is CleanSpark up right now? Oh my God, that was such an iconic picture. Yep, CleanSpark's up 30%. Okay, so GameStop, let's talk about that. emitderekfund@gmail. That's the email. emitderekfund@gmail. So last night, a couple of things happened. Let's spend a good 10 minutes on GameStop, and then we'll keep going from there because this was just incredible news. And this morning, as soon as I woke up, we had new updates to this news, and it was just incredible to see. I put out yesterday, and I don't have a position in GameStop, okay? I do not have a position in GameStop. However, I am starting to feel like GameStop is not as big of a meme stock as people say it is. And by the way, I've called it a meme stock as well. Why did I feel that? So this is what happened yesterday at 4:39 p.m. GameStop completing an at-the-market equity offering program of 75 million shares. Now, to my understanding, they already sold another 45 million shares 2 weeks ago in mid-May when Roaring Kitty came back and he started tweeting and doing all that stuff. Which means they raised $2 billion yesterday. They raised another $1.5 billion in May. They have close to $4 to $5 billion in the bank. At least $4 billion. I think some people say it's $5 billion, but it's about $4 billion if you look at the 120 million shares they basically dumped on retail. They diluted shareholders by I think close to 20%. They raised $4 billion. You know, when a company goes IPO, they go public. What's the whole point of going public? Initial public offering. They offer shares, they raise money, and then they use that money to finance their operations into the future. GameStop basically did 2 IPOs, raising $4 billion for a company that's been public since 2000. The stock was up 22% yesterday. Now, why did this matter? Well, this is kind of how it played out. They diluted shareholders with 75 million shares. They now have 0 debt, $4 billion in cash. Market cap is about $9 billion, or market cap today. Let me just check to make sure. Market cap is about $13 billion. So a little bit under 40% of the market cap is in cash. The stock has gone up even with all the dilution. This is the part that I just can't wrap my head around. Shareholders are buying the stock even though they're getting diluted. The price that they got diluted at was about $28. So it's a hell of a price. I mean, it's well above Roaring Kitty's $20 strike price. And now they have $4 billion to transform the business. $4 billion to transform the business. Bsoft says, I hate you so much. I read that tweet and I found myself thinking, is GME a potential long? We're going to have someone join the market close today who is probably buying some GameStop that you guys would never think he would buy GameStop, but he's probably buying some GameStop and he's going to give his thesis today on the market close. I'm not buying GameStop, but I just want to say their operating expenses are not bad. They figured out how to get $4 billion basically through thin air. They only lost $32 million last quarter. Could I see GameStop being profitable in 2 quarters? I could. $32 million is nothing, dude. They make a couple of changes. They're going to make a cent of EPS versus losing, I think, like 2 or 3 cents per share. If, and it's a big if, but if they figure out how to use this $4 billion is not a joke. That's a lot of companies would kill to have $4 billion with interest rates the way they are. They didn't have to borrow that $4 billion. They got to dilute shareholders who happily gave them $4 billion. If they can use that to turn the company around, even if they just put in $500 million to Bitcoin, dude, if they put in $50 million into Bitcoin, dare I say this company does not become a meme stock anymore. Now, again, valuation makes no sense. The legacy business is not exciting. Digital is taking over the legacy CDs. I get it. Like it's not exciting. But Roaring Kitty is potentially going to own 17 million shares if he exercises his call options. His supporters want to support him. They're never going to leave. They want to see him win. It seems like he calculated this entire thing happening. His options expire in a week, and he basically realized that if he could prop up the company enough to get them to dilute shareholders to raise the $4 billion while the stock was above his average price at $20, then essentially he could support the company indirectly by causing all this hoopla, get them to have $4 billion in the bank, and now they get to execute with that $4 billion while he gets to keep an average of $20, which still is you could call it overvalued stock. But again, stocks don't always trade on just pure fundamentals. A lot of stocks trade on just pure sentiment, because what we're seeing with Apple and Nvidia right now. And if the sentiment around GameStop is this is a changed company that has $4 billion in the bank to do whatever the hell they want, then I think this story is just getting started. And that's what I'm seeing in the context of GameStop right now. So it's actually incredibly excited. I don't have a position. I think Robinhood is the main winner of all of this. And I understand what Robinhood's business will do if GameStop does well. I don't really understand how GameStop turns around their business. But if you are long GameStop, it's an incredibly exciting day. Then this happens this morning at 7 a.m. Citron Research is no longer short GameStop. It's not because, and this is from their tweet, it's not because we believe in a turnaround for the company will ever happen, but with $5 billion in the bank, they have enough runway to appease their cult-like shareholders. Despite Wedbush setting an $11 target today, we respect the market's irrationality. After all, Dogecoin remains a $20 billion entity. While the increased share count might temper the mob mentality, Citron will be watching from the sidelines for now. BTW, the kitty live stream was still an insult for the capital markets. Okay, that last line is stupid. But the point is, Citron Research, the guy who lost 100% of his short on his money when he covered GameStop at $90 back in 2021. I'm pretty sure they didn't lose money. I think they probably covered right before the offering was complete. Maybe they lost a little money, but we're not sure if they lost any money or not. They decided to cover their short because they're like, this is stupid. They have $5 billion in the bank. If you're still, for every $28, every like $7 to $10 of the share price is cash, which means theoretically there's a floor to the stock. So even though we think the company is worth nothing, if there's enough people willing to buy it, just like Dogecoin, I mean, what is Dogecoin really valuable? But there's people that believe in it. That is something that could keep the market price and the market cap elevated, which is what's going to be beneficial for GameStop. That last line made them sound salty. Yeah, I wish they didn't put that there. I wish they just said, hey, we're not going to be short GameStop, but trying to critique Roaring Kitty was stupid, because at the end of the day, does Nvidia deserve to be up $3 trillion? Does it deserve to make $1.5 trillion in 6 months added to the market cap? No matter how well they've done? Probably not. But there is a future expectation for what Nvidia will be able to do. And that future expectation gets the market excited. I think we talked about this when GameStop broke out back in early May. GameStop's down 2% right now in the pre-markets, which is that stocks always trade on the perceived reality of what will happen. I mean, that's it. The people buying the S&P 500 right now is because they believe the S&P has more room to run, because as interest rates come down, companies will benefit. IWM, we didn't even look at IWM. IWM, that's up 2.8%. Look at that. Russell's up 206. And so do you believe in all the companies in the IWM, all the small caps? No, but you believe there is a narrative that will help them succeed in a better rate environment. I mean, even Palantir, one could argue Palantir does not deserve to be worth $53 billion while they're only growing 21%, but there is a narrative that this is a special company. They will grow into the valuation. They can get a government deal tomorrow for $500 million, and that deserves a premium. And the market, the Palantir has not gone below 20 since February 5th. The market has come to that assumption around an individual equity, and it does that for many equities. So I think the idea that GameStop trades above $20 is not crazy. I'm curious in the next week what the hell Roaring Kitty has planned. Now, here's what he tweeted over the last couple of hours. I think, his call options expire in 8 days. So he's got to do something to get this thing to pump so that he can either exercise or have the liquidity to exit. I don't think he's going to sell the options. I think he's going to exercise the calls and own a shit ton of shares and go super long GameStop. So this is what he posted yesterday. Nice little meme right here. This is a very famous meme we see that people post all the time. This is another one. He's critiquing options, or he was basically making fun of people that say that he doesn't know what options look like, because everyone's like, oh, your options are going to expire worthless. And he's basically making fun of people saying, I think this guy's so smart, and he knows he's smart, but he's playing the fun guy. And then he tweeted this the other day: you were a billionaire. Some people are saying he was actually saying he was talking to Ken Griffin here versus himself, because he almost was a billionaire when GameStop was at $70. But I think he's just having fun with this whole thing, and he's making fun of himself, and he's enjoying the moment. And now if he goes live again and he presents a better fundamental thesis with this $4 billion in the bank, things can get really excited for Bitcoin. For GameStop. Oh, and final thing I'll say, dude, if they just buy some freaking Bitcoin, if they just put $1 billion out of that $4 billion into Bitcoin, you get crypto traders invested, you get the algorithms in the market using you as a Bitcoin proxy play. Bitcoin goes to 75, 80,000, which seems like it can happen by the end of the year. They're up on their investment on Bitcoin. You get the sort of MicroStrategy effect. SMLR, that med tech company, they bought $40 million worth of Bitcoin. They went up 30% in the last couple of weeks. I think it's a no-brainer. They just throw a little bit of money at Bitcoin. They start the process. Now, what they said in their SEC filing was that they're going to use the money for mergers and acquisitions. So we'll see what they can acquire to help them out. But I think Bitcoin would make a lot of sense if they do it as well. There's no way he can sell those contracts. He holds 75% of the $621.20 call. He will have to exercise them. Yeah, I agree. The only way he sells is if the stock gets to like $100, then he has the liquidity needed. But I think he wants to exercise them. And the market makers are probably already long enough stock to be able to feed him the shares. The question is just if the stock can get to a healthy level where when he buys them for $240 million, he is already up a lot. He's going to have to sell some of them to, I think, get the liquidity to buy the other shares. So maybe he doesn't buy all 12 million. Maybe he only buys like 10 million and he sells 2 million worth of call options to get the money to buy the other 10 million. But we'll see what ends up happening there. All right, so that's what we got. If you are just joining, thank you for being here today. We got the market open in 24 minutes, 9:30. It's 9:06. 30 minus 6 is 24. Quick maths in the chat. Know what I'm talking about. GameStop right here, down 2%. It was up 22% yesterday. CPI came in at 3.3. Market thought it would come in at 3.4. S&P 500, 541.74. That's why the markets are doing well right now. And that's why it seems like the markets are excited because they feel interest rates are going to get cut. Remember, Bank of Canada already cut, ECB already cut, European Central Bank. And so now it's just a question of if the United States is going to meet them. And I think they probably will. It just might take some time before that ends up playing out. Cool. So that's what we had in the morning. GME strategic investment in SoFi. Oh God, that would be crazy. That would be crazy, dude. Could you imagine? Could you imagine they invest in SoFi? I mean, like, if they take a position in an equity that has a cult following, could you imagine they say, hey, we like the world of online banking and we've taken a strategic position in SoFi. Goodness gracious, dude, it would be insane. It would be insane. Robin at $24. Yes, that's correct. J-Pow speaks at 2:30. J-Pow speaks at 2:30. So we'll talk about J-Pow as we get into. I'll be live at 2:25, and so we'll hear from J-Pow at 2:30 and see what he has to say about the meeting. All right, let's talk about Elon Musk. Elon Musk has his pay package decided on tomorrow, and so we need to figure out if Elon's going to get paid. Oh, by the way, Cathie Wood is disclosing her price target today on Tesla. She's releasing a new 2029 model. Put in the chat what you think. Oh, they already announced it. Never mind. They already announced it. Okay, so before I share, put in the chat. So I'm looking at ARK's 2029 price estimate for Tesla. There is a bear case, a bull case, and a base case. What do you guys think is the bull case for 2029? That's it. Before I share the screen, what do you guys think is the bull case? Let me update this right here. What do you guys think? Put a number in the chat. Whoever gets the exact number, I'll give a $25 Amazon gift card to. You got to get the exact number, though. Got to get the exact number. The number ends in a 0. So don't go crazy like 7434. It's a number that ends in a 0. It's 4 digits. So the hint is it's a number that ends in a 0 and it's 4 digits. I'll give you guys 2 minutes and let's see what you guys come up with. Let's see. 50,000. You're a little too bearish there, bro. 6,500. Oh, someone got it. Someone got it. Someone got it. Someone got it. All right. So here we go. Here we go. Someone got it. Oh, someone else was close. You guys are actually close. You guys are actually not that far off. All right. So ARK expects the bull case for Tesla to be 3,100 in 2029. B Sob, you got it. Please DM me on Twitter at AmitIsInvesting and just hit me up and say you're the guy who got the number, and I will send you a $25 Amazon gift card. Twitter is in the chat. Please make sure to DM me. Try to DM me like right now or within the next 10 minutes so I get you in. 3,100. 3,100. Oh, Bsoft said I already knew. Wow, that's honesty, bro. That's honesty. Dude, I want to give you the $25 just for being honest, dude. People aren't honest. That's actual real honesty. He said I already knew it, so I'm not accepting it. Well, I want to give you the 25 just for being part of the chat, dude. That's actually dude, we are missing honesty on this planet. So if you please email me or please send me the DM anyway, because I just want to give to you just for being awesome in the chat. But here we go. Cathie Wood, she expects the expected value in 2029 to be $2,600. $2,000 is the bear case. I think $2,000 is a $5 trillion valuation. 3,100 gets you closer to $7 trillion, which means that would be a CAGR of 25%. I think, no, that would be more than a CAGR. What, stock's 500 right now? No, stock's not 500. Stock's 170 right now. Holy crap. That means 3,100 divided by 170. She expects the stock to go up 18x. 18x in the next 5 years. That's insane. That's insane. That is absolutely insane. We'll talk more about that. Let me get to Elon's pay package. Let's discuss a little bit about that as well. And then we'll get deeper into this ARC model. I think they released an entire report. So let me pull up their report while I'm playing this video. And let's try to see if I can get deeper into this report. That's incredible. $3,100 she expects in the next 5 years. That's, I mean, is it impossible? No, but all right, we'll talk about that. Here we go. Let's listen to this and we'll keep going.
General Motors actually cut their full year outlook for EV production. They took it down slightly from 200 to 300,000 to 200 to 250,000 EVs. And GM CFO noted that while overall demand is fine, the industry is just not taking off like many expected. I mean, who could have seen that coming? It's stuck at about 8% of cars and trucks sold. But as we have said on this show many times, maybe people don't want electric cars. They want Teslas. It's a different thing. If you've driven both, you know what I'm talking about. And so if Musk were to leave, and that's a huge, huge if, probably unlikely, would Detroit be the ultimate winner or maybe ultimate loser? Let's take that to your leadoff panel tonight. With us, former Ford CEO and CNBC contributor Mark Fields and GLJ Research founder and CEO Gordon Johnson. Mark, listen, I don't think there's any way that Musk would ever leave Tesla. It's his baby, but he's got a lot of things going on, and this could be a big slight if it doesn't go through. What do you make of the vote? What do you make of Musk's future at Tesla either way?
Well, listen, I strongly believe that this is gonna pass. It's gonna pass with a pretty good margin. But listen, at the end of the day, a lot of the shareholders, particularly the ones that have not bought in the last year, the ones that have been there for quite some time, they've made a lot of money, and a lot of them are thinking, hey, he made this fair and square, so I think it's going to pass. If it doesn't, I mean, that's the big question. You know, would Musk just put less focus on Tesla? Or in an extreme, would he just say, I'm exiting the business, and I'm going to focus on other things? And oh, by the way, I'm going to take the AI efforts and the robotic efforts at Tesla with me. I do think this would be good news for the established automakers like Ford and GM, because I think one of the biggest impacts is you're going to see a high rate of attrition of key talent, because in Silicon Valley, people don't necessarily work for companies. They work for people that they respect and drive them. And so if Musk leaves, then I think some of his key people will leave. And I think some of those people that followed people to Tesla will leave as well.
Gordon, your hot take is exactly the opposite of the premise that I just laid out, I think, which is that maybe the best thing for Detroit would be for Musk to stay.
Right. So, and thanks for having me on, Brian. Good to see you again. Listen, Musk has long ago mentally checked out of Tesla, but he's not going to leave, no matter if this vote passes or not. What he's going to do is what he's done for years. He's going to continue to use Tesla to milk money out of to support his other businesses. Let me give you some examples. Let me look at my notes. CNBC reported that Tesla brought millions of dollars worth of NVIDIA chips that they sent to XAI. Yahoo reported that the Boring Company is now tunneling under Tesla's Gigafactory, which Tesla is paying them for. You know, Tesla's acquisition of Solar City, where they use fake solar panels to sell Tesla investors on using Tesla shares to bail out Elon Musk's cousin. You know, allegations that Tesla is using, Elon Musk is using money to build houses. The point is, he uses Tesla as a piggy bank. So whether his compensation package passes or not, he's going to stay at Tesla. He just wants to get this money. So I don't think there's a big change. However, for Ford, GM, and if you're a short seller, you want this deal to pass. The reason why you want it to pass is because Musk is a part-time CEO. He's not going to work any harder. You want him there because he's focused on other ventures. You want somebody who's not focused on the auto business And he's not, because Tesla is a low margin, very low margin now car company that's not growing. Musk likes to focus on growth companies. So his focus is going to be elsewhere. So if I'm a short seller or a competitor, I want him to stay there.
Well, to be fair, I mean, there's plenty of other really smart, good people at Tesla. Musk is the face. He created the
Gordon is something else, isn't he? We got 1 minute left.
company, but at the same time, there's a lot of other really talented people that are there to keep that operation going. Mark, when you were at Ford, how much did you guys look at Tesla, look at Musk, look at what he was doing? I'm not going to say invented the industry, because electric cars have been around for longer than gas cars, if we're just being intellectually honest. But how much did you guys look at what they had done and say, well, we like this, we don't like that? I mean, how relevant is he to the entire industry?
Well, initially we did look very hard, right? Because, it was kind of the innovator's dilemma. But as Tesla was succeeding, we started to benchmark them, very, very heavily. And now the industry today, the established industry, benchmarks Tesla a lot, particularly around not only just software and battery development, but also manufacturing techniques. So, they are part of the conversation now.
I mean, again, I think he's not even giving him enough credit. They're not just part of the conversation. There would not be an electric vehicle market without Tesla. It's Tesla and Elon's world, and everyone else is just living in it. So, I mean, Gordon's argument here is that Elon is distracted from Tesla, S&P 500, 541.86 right now, and that he's never, or at least over the past couple of months, he's not been as interested as he was before. I think, one could make that argument. The problem is, if we see how much work he's put into forcing the adoption of the robotaxi and the potential of the robotaxi to start getting out there and becoming mainstream. I mean, literally, you had people leave Tesla, probably Drew Baglino, Rohan Patel, all these guys, because they didn't agree with Elon's ruthless approach to getting robotaxi to be the fundamental mission of Tesla. I mean, literally in the past 2 months, we've seen a pivot from deliveries on cars to focusing on how many rides can we deliver, which is a new approach to thinking about the business in and of itself. So the idea that he's not interested in Tesla, I think, is blatantly false. Is he a bit distracted? Of course. I mean, like, logically, anyone would be distracted if they have 7 other companies that they have to worry about. But that doesn't mean he doesn't deserve to be a Tesla. I also think it doesn't mean that he doesn't deserve to get paid. I think that's just absolute ridiculousness. GameStop right here down 4.4%. He does deserve to get paid, and I hope this vote comes through where he does get paid. Now, in the context of Cathie, she not only believes that he deserves to get paid, but again, she believes that Tesla will be $2,600 a share. I can't find the actual valuation report because she hasn't really put it out yet. I'll only have these numbers. So I don't think ARK actually put out the full report. But once we get that full report, yeah, it's not in my email either. I'm subscribed to them, but I don't have the email. Then we're going to see how she gets to those numbers. I'm assuming it has to be some analysis of robotaxis. There's no way that Cathie gets to this argument about Tesla being worth as much as it's worth without a sophisticated understanding of how much robotaxis will create. She also believes that the revenue from robotaxis over the next 10 years will be closer to 8 to 10 trillion, which means that if Tesla captures a significant portion of that, their market cap can get closer to those levels at 8 to 10 trillion. I mean, Tesla could be one of the companies that actually has, in her opinion, trillions of dollars in revenue just off robotaxis. Is that a little bullish? Yeah. Robotaxis are still far out, and on 8.8, we're probably going to get an understanding of what the robotaxi market looks like and what Tesla's first design is, but we're not going to get an actual car or an app anytime soon, I would argue, not until end of 2025, early 2026. But if it happens earlier than expected, then maybe all the analysts are wrong on this. Most of the analysts have a $120 price target on Tesla. Tesla right now, 171. Retail is propping up Tesla. The retail vote is likely what's going to get Elon paid. Tesla right here at 172. So the question simply becomes, is Tesla going to be able to get through the next 7 to 8 months, even if rates come down, with the assumption for the market that FSD is on the way? And for all intended purposes, FSD is amazing right now. It needs to get perfect, but it's still amazing. It's just the market believing that FSD is going to get to the level where robotaxis could become a real thing. And we'll see. Also, one thing Tesla did say yesterday, I know a lot of people made a big deal out of this. I didn't think this was the biggest deal, to be honest, just being objective here. But people thought this was a big deal. Apparently, Optimus has been rolled out inside of Tesla. So they said right here, 2 autonomous robots. We got the market open in 10 minutes. 2 autonomous robots are now being deployed, performing tasks in the factory autonomously. The reason I didn't take a big, serious look at this, and I don't really care too much, is because, I mean, what are the robots actually doing, right? Like, we know Optimus can do stuff by itself, but like, Is it actually like putting doors on the car? Like, or is it like, putting something in a bucket? This is cool, but this is nowhere near, oh my God, Optimus is the future yet. I still think we're a couple years out, even though Elon says by 2025, it's going to start to be in commercial factors. Now, granted, it's a good sign, but Optimus as a thesis for Tesla has not been factored in at all by Wall Street, which I think is a mistake, but you can't really blame them. They have zero proof on if Optimus is going to become a big business. I think it will be. So until we really get larger proof, then, the market can't adopt that and get super excited about that. But look, since 2018, I mean, Tesla's done a lot, dude. Elon has done a lot. Elon's the reason all this shit happened. And so I hope he gets paid, dude, just as someone who supports like entrepreneurs and people like doing well and getting their just desserts for winning in life and being meritocratic. He deserves this, regardless of all the stuff you may disagree with him politically, all that stuff. I think he still deserves this. And so hopefully we see him get it. Now, one thing Elon did do yesterday is he got rid of his lawsuit with Tesla he just answered this. I'm curious to read this. The more I think about robotaxis and humanoid robots, the more absurd the valuation becomes. Wow. So Elon just responded to ARK, or he responded last night at 1 a.m. I'm curious to read this. The more I think about robotaxis and humanoid robots, the more absurd the valuation becomes. Literally, Elon's like, damn, I'm curious to see how much you guys pump my stock. I'm curious to see how nice of a valuation you guys can give me. Because, I mean, he's right. If robotaxis and humanoid robots really do become a thing, the valuation can become absurd. He did cancel his lawsuit against Sam Altman yesterday. And he basically said more will be coming on this. So let me see where he put this out right here. So Elon, remember he was going to sue Sam Altman for using the name OpenAI, and he said, hey, if you guys change it to closed AI, I won't sue you. It was like literally a joke. He dropped the lawsuit yesterday at like 5 p.m. Elon said more on this later. Maybe he's coming up with another lawsuit, but I don't think Elon dropped the lawsuit because he just felt like dropping the lawsuit. I think Elon's petty, and I think Elon's going to come out with something else against Sam Altman, but he did drop the initial OpenAI lawsuit as well. So we'll see. We'll see how that plays out in the next coming months. They've released videos of Optimus doing really simple stuff. Yeah, they have. And I mean, at the end of the day, it's still incredible what Optimus is doing, but it's not enough, I think, for Wall Street to think that it's going to become a huge business just yet. But that's why you invest before, you take a risk before it ends up happening if you believe in it. Okay, cool. So we've got Redfin. For some reason, real estate stocks are up. Well, the reason is that if interest rates are coming down, that'll be good for real estate. So Redfin is up right now, 8%. Open Door is up 8.4%. Zillow, who's in any of the real estate companies? Let me know. Zillow's up 6.28%. Is SLG, is the REIT up right now? SLG is a REIT up 5%. So real estate companies actually getting the benefit of the potential rate cut because inflation came in lower than expected. 3.3 versus 3.4 for those that are just joining. And that's helping the markets right now. Let's go to the Mag 7 and see what's going on. Microsoft is up 436. Meta 513. Google 179. Amazon 188. Nvidia 123. And then Tesla 171. Elf Beauty right now 194. Elf was at 178 yesterday, so if you got the dip on Elf, not bad at all. And then again, Apple at 206. Now we talked a lot about Apple yesterday. Home builders up. Home builders are up as well. Apple added 15 billion in market cap yesterday. Let me get the exact number. It was a pretty big number. So a 6% move in Apple, given how big it is a lot. So Apple right now, or yesterday, Apple added 215 billion. Yeah. So these are the largest days for single increases in market caps. 277 billion in Nvidia on February 22nd, 218 billion in Nvidia on May 23rd. So literally that happened this year. And then Meta added 197 billion this year. Google added 195 billion this year. And then Apple added 215 billion this year. So the largest single day market cap gains happened all in 2024, all in the last 5 months. And Apple got 215 billion yesterday. Now, the thing about Apple's $215 billion gain, there's two things about this. Every 2 weeks, funds have to rebalance and buy and sell the S&P 500. So a lot of times, every 2 weeks, most funds, hedge funds, institutional funds, etc., they flush out some of their assets and they continue to allocate into their highest conviction names. Apple, Nvidia, and Microsoft are the three biggest components of the S&P 500. Apple's about 6% of the S&P. And so every 2 weeks, now Apple's going to get more inflows coming in, not just via the S&P 500, but directly to their stock as fund managers want to have more exposure to the company. So the question now is, can $200 become support for Apple? Because for the longest, it was stuck at 167. If 200 becomes support for Apple, I mean, this is a company that's going to be well above 3 trillion, and it's not really going to have to worry about dipping in to that 180, 190 range unless the entire S&P falls, which means then a lot of these companies would fall as well. So it's going to get more inflows. The second argument here is that if the AI upgrade cycle becomes legitimized as something that is going to be perceived to happen, meaning if it doesn't happen, Apple's screwed. But if it starts to happen, even if it's not a huge upgrade cycle, but you start to see more and more people decide, yeah, I'm going to buy the iPhone because of the AI features, which personally, I didn't see the features as like that substantial of a reason, but it doesn't really matter because if you're holding on to an iPhone 12, you're going to upgrade anyway, right? It's time to upgrade. It's been almost 4 years. Then you've got 1.95 billion, or sorry, 1.5 billion devices, because 5% of them already have the hardware to support the new iOS 18 upgrade, the features that need to upgrade, right? So you've got 1.5 billion devices that potentially need to upgrade. If you even get, 10% of them, 5% of them to upgrade, you're going to be adding probably 7 to 10% growth in fiscal year 2025. Right now, this year, they're going to grow maybe 1 or 2%. So the market is giving them the 11% gain year to date, the $215 billion in market cap yesterday, on the assumption that upgrade cycle via the AI phone will happen. And the market's basically putting their bet on Apple, saying that, yeah, we believe it'll happen. And if it does happen, Apple probably goes to 250 or at least 220, 230, either by the end of the year or early 2025. And so that's what we're seeing on Apple. And we will see how all of that plays out. P. Morris says, starting amidst swallow count in 3, 2, 1. I'm sorry, dude. I'm excited. This is so much that's going on right now. Meta at 507, Microsoft at 432. Let's look at AMC. AMC is at 1.44%. I don't understand why GameStop's selling off right now. That's actually very interesting. And I think this is the problem with investing in something like GameStop. It's like they had amazing news over the past 24 hours, but there's going to be people that still sell, right? Because they don't believe in, like at the end of the day, to hold GameStop, you have to really believe in this long-term vision for what they're going to do with the $4 billion in cash that they just raised. And some people probably don't, and they're just selling. So there will be sellers as the price rises. I don't think the company is going to do that much more dilution because they've already sold 120 million shares. So I think they're good on the cash. So now the question is, how much does the cult actually believe in this stock? And how many more people can get into this and start buying it up? I mean, we haven't even seen the type of squeeze we saw back in 2021 when the sucker ran to $450. So, and I know they've done some splits since then, but like, if it even runs to $100, it's going to be approaching those same levels. But it has to get there, and we will see if it ends up doing that over the coming months. And again, those call options for Roar and Katie expire next week, and so we're going to see what happens. Did CPI already happen? Yes, it happened an hour ago. 3.3 versus 3.4. That's what got the market excited. Robinhood, $24. For those that missed the May metrics yesterday, let me just pull up a graphic real quick so you guys can see it. Those May metrics were pretty incredible in my opinion. And now if they just crush June, they're going to have a good Q2. The biggest thing that I think people are missing from the May metrics is right here, margin balance. So remember how they cut margin rates? They added $400 million in 1 month to their margin. Now, are they making less on the margin because they cut their margin rates from like 12% to 6%? Yes. But the point is, and this is why Robinhood, I think, has a significant moat, and I think people misunderstand it, they care about the user experience. The CFO said they brought so many like rich people onto the platform that are used to dealing with, lots of margin because they use it strategically. And they wanted to make sure those rich people coming from Schwab and Fidelity that had tons, like talking about millions of dollars in assets, they could access margin at such a competitive rate. They never would think about leaving the platform, because why would you go to Schwab, pay 12% on margin where you could pay 6.75% or 5% in Robinhood? So the increase in people taking out margin is what went up for Robinhood, which means that they're going to make it up on the volumes, even if they don't make it up on the actual rates itself. The most disappointing part of these numbers were the crypto volumes at 7 billion. I think the reason for that, which is down 30% month over month, but it's up double year over year, I think that's because people were just kind of bored in May. I mean, we did see Bitcoin go to 71,000, but that was like for a couple of days. So I think people kind of just held on to the crypto. They didn't do much trading. As you can see in March, we had 23.6 billion, April 10 billion because Bitcoin fell. The one thing about Robinhood is they did increase their spread. So instead of taking 0.35%, they take 0.45%. So even if they had less volumes, I think they probably made it up, at least somewhat made it up on the actual transaction cut they take, which is going to be good for the overall revenues. Equity volumes, 86 billion, options, 131 million, 20 billion in cash sweep, 3.6 billion in net deposits. Absolutely incredible. 120,000 new people joined the platform, and then 135 billion assets under custody. So that was very good for Robinhood yesterday. We got William here saying I left Schwab today. Yeah, Schwab. Another reason GameStop could have pumped more yesterday is if Schwab and Thinkorswim was open, but they were shut down for many hours for a lot of customers. So now that hopefully doesn't happen today, that could also be another thing that helps maybe GameStop, but also the broader markets as people have access to their accounts. So these were the Robinhood metrics, and I thought they were pretty damn incredible. I mean, 3.6 billion in deposits, dude. That's every day. I cannot believe they're getting that many people to put money into the platform, but they're incentivizing them and they're doing it the right way. Oh, it's 9:30 a.m. I didn't even notice. Okay, the stock market is now open. Wake your ass up. Here we go. Robinhood opens up at $23.94. GameStop down 6%, $28.46. SLG up 6.6% on the day, $56.07. My goodness. Open Door is up 12%. By the way, you guys didn't let me know until 40 seconds after 9:30 that the market was open. So you guys in the chat did a bad job of informing you. So I blame you guys for that. S&P 500, 541, up 0.85%. IWM, Tom Lee's thesis on small caps is up 206, 2.7% up on the days. CleanSpark up 3%. We're going to look at Trump, who just met with the CleanSpark dude, the CleanSpark chairman. So we're going to look at that picture in a second, but that's up 3%. XLF, the banking ETF, is up 1%. Redfin, real estate companies, up 12% on the day. Rocket Lab is up 5%. Palantir, $24.04. We are past $24 on Palantir, up 0.94%. SoFi up 3.2%, above $7.22. Enphase, $139. Wow, Enphase 5.4%. Let's see if Enphase can get to $140 on Enphase. Let's see what happens there. Apple at $207. Apple's green. Hims is $23, up 4.5% on the day. Snowflake up 1% at 0.93%, $129. Salesforce is up 0.3%. Oracle had a phenomenal earnings. I want to read you guys one quick line off Oracle's earnings. This sentence right here. In Q4 alone, Oracle signed over 30 AI sale contracts totaling more than 12.5 billion, including one with OpenAI to train ChatGPT in the Oracle cloud. If that doesn't show you that AI is real and that it's actually happening, I mean, to get 13 billion in 90 days off AI contracts, AI is here. It's happening. It's time. And Oracle's capitalizing on that momentum. Apple right here at 208, up 0.72%. Bitcoin, 69,000. Was stuck at 66,000 yesterday. So a nice momentum here. Now, Bitcoin did have a nasty day of outflows yesterday. I think they lost like $200 million in the ETF outflows. So nasty day on Bitcoin outflows, but seems like market likes it as interest rates potentially are coming down because CPI came in lower than expected. KRE, Regional Banking Fund, is up 2.5%. TFC, Regional Bank, is up 2.6%. ARM, a little bit away from all-time highs. That's up 3%. Micron, 139, 2.92%. I believe Micron is at all-time highs. Micron's all-time high is 142, so it's close to those levels. CrowdStrike, I mean, dude, if you have CrowdStrike, congrats. Like, this is just one of those stocks that it's done phenomenal. There's nothing more I can say. It's done phenomenal. One could argue it's not even overvalued. It's definitely richly valued. Maybe it's not overvalued. 386 now in the S&P 500. That's why that's up. Rivian from $10 to $12, up 2.2% on the day. Rivian's up. Uber is up 3.72%. Robinhood, $23.75, up 2.28% on the day. Tesla is red. Tesla's red. Enovix at $13.30. And again, Tesla's red because that vote is still creating uncertainty. Enovix, shout out to those who have Enovix as well. I mean, look, Enovix is one of the more riskier companies that exists. That's public, but 1308, I think this thing was $6 like 5 weeks ago, up 5.66% on the day. Rates come down. That's a risk-on environment for Enovix, and they have a deal with the top 5 leading OEM for smartphones. People are thinking that's Samsung, which is why, again, dude, Enovix made like 40,000 of revenue a couple quarters ago, right? Then they acquired a company and now they're doing a couple million. But like the market cap of 2.24 billion, you could argue that's more overvalued than something like GameStop, but it's all about the perception. And if that perception is real and if there's a following around it, then that stock is more valuable. SoFi, nice 4.4% on the day on SoFi. Seeing a little bit of momentum now on SoFi today. We're starting to see people get into SoFi a little bit more. So SoFi's there. Vitali's in the chat. He bought a lot at 6. Yes, Vitali has been super, super long in Enovix. In fact, the only reason I know about Enovix is because of Vitali. It's a TJ Rogers company. So that shout out to Vitali. I think he's up double on Enovix. And that one is doing very well for him. With Carlos as well, I think they both have a decent position in Enovix. Palantir right here, 24.27. So Palantir up 1.76% on the day. I think it touched 24 yesterday, or it tried to touch 24. It was at like 23.90. But today breaking through that $24 level. QQQ 472. Enphase as well. Speaking of Vitali, there you go. Enphase at 140. There you go. Enphase is at 140 Dolores, and it's doing well as rates come down. Let me just, okay, cool. So Enphase right here at 140. SoFi 733. What else do we have? Oracle 138. Amazon's down just a little bit now. Amazon's green 187. Path is up 3%. So Path fell a lot over the past couple of weeks. Path is now up 3% right now. Celsius at 67. Celsius getting up. So pretty much every stock is seeing some momentum. I mean, if you're down today, like Bitcoin, Biddy, this is a short Bitcoin ETF. That's down because it's inverse of Bitcoin. So the stocks that are down are like CrowdStrike, they already ran up a lot, right? Dell, this one ran up a lot already. So stocks that ran up a lot are seeing some downside momentum. SMLR, the company that bought $40 million of Bitcoin, they're up 7%. This is why I think GameStop needs to buy Bitcoin, because why should SMLR be up freaking 7% today? There's no reason. Like, there's literally no reason outside of their Bitcoin holdings, which I think is just so smart for them. So they're up. Lyft is up. Uber is up. Any company that's down probably already had a nice run over the past couple of weeks, or is just a little bit more sensitive to some of the stuff going down, which is why or they're at all-time highs, or their interest rates don't affect them too much. But that's why they are down. Faraday Future, for example, has run up a lot, even though it's at 53 cents. It was at $2 at one point, so that one's down. Abercrombie has run up a lot. That's at 185. But the majority of companies are benefiting from this idea that rates are coming down potentially. 172 right here on Tesla that we're seeing as well. What do you think the market would do if J-Powell cut today? If J-Powell cuts today, dude, bro, if J-Powell cuts today, first of all, that's not happening. The markets are pricing a 5% chance that that's happening. I don't think that's happening. But if that does, I think the markets are going to really like it. The market's going to be like, all right, it's time to keep moving forward. But the thing is, he doesn't have to. I mean, the S&P is, at this point, let's see year to date. The S&P, I think, is up 15% year to date, or 14%. 14.5% year to date without a cut. Could you believe that? If I told you in December, guys, S&P will be 540. That's when the S&P was at like 470. By June, with 0 rate cuts. I don't think anyone would have believed me. I wouldn't have believed myself. I would have been like the only person that would have believed me would Tom Lee would have been like, hey, you want to get dinner? I actually think you're right. Tom Lee would have been like, yeah, I think that's possible. Like, it's just insanity. It's just insane. But it's not, in my opinion, supported through nonsense. It's supported through real earnings. Every S&P 500 company beat earnings by 8%, or on average 8% in Q1. And if that happens in Q2, if NVIDIA, Microsoft, Apple, Google, they all crush in Q2, Palantir, like if all these companies crush in Q2, I mean, we're going to end the year off in a nice way, because the market's going to realize that it's better to put our money here than in a money market fund. And it's going to make sense. Oh, so Meet Kevin. Let's talk about Meet Kevin. So he sold NVIDIA yesterday. SoFi's up 5%. He sold NVIDIA 2 days ago, and he bought Biddy, which is the ProShares short Bitcoin strategy ETF. So he's bearish Bitcoin and he's bearish NVIDIA, essentially, because he's selling. He still has his NVIDIA, but he's starting to sell. Yesterday, this is what he did. He sold NVIDIA again. He bought Tesla. He bought Biddy again, which is the Bitcoin short ETF. So he's still bearish Bitcoin. He bought Enphase, and he bought Trade Desk. Now, it's really interesting. Sometimes the buy and hold thing just works. If he'd never sold his Enphase, I think he would be break even right now. I think he sold his Enphase at 118 or 107. I believe his average, if I'm not wrong, is closer to 140, 150. If he just held his Enphase and held his Tesla, because I don't think he made a lot of money on Tesla. He sold it at 170 and then he got back in at like 168. Like, if he got in at 138, I would be like, yup, Kevin's a genius. He did not get in at 138. I think he was scared to get in at 138. So he's ended up buying now, which is the exact price he sold it at 2 months ago, when he caused this whole hoopla of him selling Tesla. So if he really did nothing, I think the ETF would have been fine, quite frankly. But I guess he moved around a lot. PP ETF is up 1.31%. So that is up right now on the year. I think it bottomed at about 20 back in October. Now it's at $28. Robinhood 23.73. He also did buy Robinhood and Snowflake the other day. I think he got Robinhood at like $20 and Snowflake at like 145-ish. So he bought those two. Tesla 172, S&P 541, IWM at 206, and then CleanSpark at 1661. And that's what he had. Now imagine if he had true conviction and bought more Enphase when it was around 100. Yeah, dude, but it's just tough, right? Like, this is why the markets are ruthless. This is why it's so damn hard. Because if he bought and he kind of just like sold out of the losers in the ETF and just bought more Enphase at 100, he would be up substantially right now. But how do you justify to your shareholders buying Enphase when it's getting decimated, right? And but like that's what makes a good fund manager, right? Is when you buy when everyone hates it. It's just hard. It's really, really hard to do that. Here's Trump with CleanSpark chairman Matt Schultz. So Trump, this is him. He's a pro crypto president. If you're for crypto and you care only about crypto, if that's the single issue you care about, which I would imagine there's a couple million Americans that literally only care about crypto, they're probably voting for Trump. This is what Trump said on Truth Social yesterday. Vote for Trump. Bitcoin mining may be our last line of defense against a CBDC, which is like a centralized dollar. Biden's hatred of Bitcoin only helps China, Russia, and the radical communist left. We want all the remaining Bitcoin to be made in the USA. It will help us be energy dominant. So Trump is leaning heavy into the Bitcoin base, and that's what we're seeing right now in the context of him being bullish on Bitcoin. And so there you go. He also met with the Bitcoin Magazine CEO and Bitcoin miners in DC. So Trump right there is bullish on Bitcoin, and that might be another reason why Bitcoin is getting a little bit of momentum as well, just to know that there's a president that potentially would support it. CleanSpark right here, 1652, up 3.5%. Rocket Lab is up right now. Rocket Lab did win a contract yesterday, if I'm not wrong. Right here, 4864, it's up 6.2%. They won a $29 million contract from the government yesterday to do something with satellites. I might be getting the exact part of it wrong, but they did win a contract yesterday, which is really good. And then again, Open Door and rate-sensitive stocks, they are up a lot today. Open Door, wow, 16% on the day, because interest rates coming down potentially helps these companies a ton. GameStop is up now. Okay, so it looks like GameStop had a little bit of a breather as soon as the market opened, and now they're up 31.42. There you go. 31.65, up 4%. I really don't think the GameStop story is finished, guys. Again, I was thinking about it all night. I was just fascinated. For those that missed what happened yesterday, GameStop completed their at-the-market offering, and they now have $4 billion in cash on a $13 billion market cap. I mean, companies would kill to have even if they just put it in treasuries and got 5% on that money. I mean, like, they can do a lot of damage with that $4 billion. And if they actually do it, if they actually use it productively, who knows where they can put the money. Nvidia's at 124. Wow. Nvidia. Freaking Nvidia. You know, the idea that Nvidia hits 150 this year is not crazy, just based on the argument that, and we talked about it yesterday, AI demand is just not going anywhere. Brad Gerstner was on CNBC yesterday, and he talked about how when he went to Taiwan, it was even more clear to him than before that AI demand is not stopping. They are backlogged for 5 years to deliver their new chips. And if that demand continues at the levels that it's at, which is like 100, 200% year-over-year growth, at least for the next 3-4 quarters, I mean, Nvidia, you could argue, is still cheap. If it hits 200, it's a $5 trillion company. So right now, what's the market cap? 3.05. Yeah, if it hits 200, it doubles. I think it gets close to 4.5 to 5 trillion. So, I mean, dude, we'll see. We will see how this plays out. Citron did cover their short. That also happened this morning, so they are out of it. So Citron's out. Home Depot, let's take a look at Home Depot. Where's Home Depot? Home Depot, that's up 4%. Lowe's should be up on this inflation news. Lowe's is up 2.67%. Pretty much everything. Costco, I bet, is up like 1%. Costco's up 0.21%. Yep. All these retailers are benefiting. Macy's, where's Macy's? Macy's is up 2.43%. Dutch Bros is up 1.47%. Starbucks is down. Starbucks, I mean, dude, Starbucks has got to lower their prices. The only way the market gets excited about Starbucks is if they increase their sales, which means maybe they have to take a hit on earnings by decreasing their prices. I went to a couple of Starbucks while I was in California. Yeah, the prices were stupid, dude. The prices were insane. It's like it's just a joke at this point. So I do think they have to lower these prices to get the market more excited, or they have to figure out how to increase the average order value, maybe by increasing that subscription service that they offer. But something's got to happen to get the market more excited about Starbucks. Starbucks right here, basically flat on the day, 79.84. Dutch Bros is up at $40 right now, up 1.6%. We're gonna have Jose join us in just a minute, and he's going to be live with us and talk a little bit more about Oracle earnings and Nvidia, and we'll see what he has to say. Nvidia right here at 124. Oracle, just a phenomenal run. Wow, 11%. Oracle market cap $380 billion on Oracle. Wow. Dividend of 1.16%, price to sales of 7. And they bottomed at $98 last year. Now they're here at 138. ARMS is up 5%. Wow. Why are you saying rates are going lower? My assumption is that if J Powell's dovish today and we saw inflation come in below expectations, then yeah, rates are going lower. Maybe it's in September, maybe in July. I think more September. But if it happens, then that's going to be that's why the market's pricing in 17% increase on Open Door, because if rates are coming in lower, I mean, they know that Open Door that sells houses and buys houses are going to get to them, buy them for cheap and sell them for higher if rates come down, and mortgage applications are going to open up. All that stuff is going to help them. So they're front running how that's playing out right now. Dell is at 132. Dell is up. ARM is up 5%. Again, ARM just getting the benefit from NVIDIA going higher as well, because it's one of the companies that's the most important in the entire semiconductor ecosystem at 150. And then we got SoFi. Where is SoFi right now? SoFi here. SoFi 738. Wow, up almost 6%. SoFi does have an 18% short flow. So, I mean, you never know, dude. You never know. Maybe this thing is what's needed to help it get through that, and that helps it as well. NVIDIA right here at 124.63 on the day. All right, folks, let's bring in a guest, friend of the channel, who's going to help us break down what the hell is going on in the semiconductors and another company that is still integral from an AI cloud computing perspective. We got our boy, Jose. What's up, Jose?
Good morning. Good morning. Hello, everybody. Super excited. You got me more excited after showcasing that NVIDIA graph there just now. So pretty good week today, right?
So NVIDIA is your largest holding.
Mm-hmm.
And every day you see your net worth just inch higher and higher. I mean, what is it like to be Jose, who has NVIDIA as his largest holding?
I mean, it's nice. It's nice. It's definitely good. Obviously, when I wish I had a lot more money in general, so my money could be a lot more. But I'm pretty happy every time I look at my account. I'm like, yep, I guess I get it right sometimes.
I love it. All right, Jose. So let's start off with NVIDIA, and then we'll get into Oracle. I mean, help me make sense of this. 124, market cap of $3 trillion. The split happens at 120. It goes up $4, basically $5 since the split. Do you think it's too fast, or do you think at the end of the day, the market just wants more exposure to this stock?
I do think it's too fast, right? And I get sometimes a lot of hate for saying this, and so many questions say, Jose, how is it your number one position, but you think it's going up too fast? I think in the short term, it's getting a lot of excitement. I think in the long term, though, NVIDIA does have the potential to be the biggest company in the world. And the reason I say in the short term it might be too fast is I know a lot of people kind of watch the content that we make, and if I believe there's a chance that we could see, not a guarantee, but a chance that we could see some pull downs. The market always gives us opportunities, even when everything looks like it's amazing. So it's more like a cautious tale where, like, look, in the future, I do believe NVIDIA will be the biggest company. In the short term, we don't know exactly what can happen here.
Let me get your take here on Apple before we talk about Oracle. Apple right here at 212, absolutely ripping right now, up 2.5% of the day. I think it's adding another 30 or 40 billion to the market cap. The AI announcements we got from Apple. I mean, you are deeply embedded into the AI space. You understand what's happening with AI. That's obviously why you've been able to be early to the party here. Were you impressed by their announcements? And do you think that will lead to the upgrade cycle, which will help iPhone sales?
I don't know if it'll lead to an upgrade cycle. Because of that, I think if you had maybe a 3-4 year phone, you still work on the upgrade regardless. So I don't know if the AI is going to drive much growth in it. I think it's just the typical phone cycle right now. What I'm very excited about is Apple has a lot of consumers use Apple or know about Apple. So by Apple making AI more normalized, I think it's going to help push even more AI apps into it, which at the end of the day is going to require more hardware solutions, more software solutions for the AI market. So it can definitely benefit a lot of AI companies if more consumers are faced forward with the AI space.
Got it. Yeah, I agree. I think if more consumers get access to AI via Apple, which is going to be the basis for, consumers to even understand what AI is, that increases the market. But if that upgrade cycle doesn't happen, obviously that's going to be bad. But I think the market's betting that it will happen. Yeah. Oracle. So Oracle said they got $13 billion of deals yesterday just from AI companies. First of all, are you long Oracle? Are you in this?
Yeah. So Oracle was one of those. I mean, luckily with YouTube, you can see a lot of things. But in January, I picked my top 3 stocks of the year. It was NVIDIA number 1, number 2 was CrowdStrike, and number 3 was Oracle. And Oracle is a very interesting play. I wanted to see something in the I got NVIDIA because obviously they have the amazing AI chips. And obviously I've been bullish in NVIDIA longer than 2024. But I wanted to get into the infrastructure space as well. But most of the big players were already pretty big. I mean, you had Amazon, Google, and Microsoft all in the $1 trillion market cap already. Oracle was one of the few that's, I still think, below 300 million. I can't remember the market cap right now. 300 billion, my apologies, 300 billion. But it was one that was making a lot of partnerships with NVIDIA earlier on. And one thing that I thought about was we've heard about this supply constraint in NVIDIA's chips. And I think the supply constraint is actually helpful for companies that are in last place. And Oracle was in last place, so right? Because if there's no supply constraint, what happens? Your Microsoft, your Amazon, all these big players can buy infinite amount of chips and continue their lead. But when there is some form of war or some form of supply chain issue, those top leaders can only go so far. So last place has the ability to catch up even faster. So Oracle has made a lot of great partnerships with NVIDIA. They announced that they're building crazy amount of supercomputers. They even mentioned that they're building the largest data center in the world right now, and they've already sold about half of it out. And I'm pretty sure they're either selling it to OpenAI or to xAI. And during the earnings call, they mentioned that, hey, look, this super center is being used by all of NVIDIA's new chips, all of their new interconnects, and they're going to be liquid cool. So overall, I think Oracle is a strong AI play.
Is Oracle one of the companies that gets ignored in the AI race? Because I mean, their earnings yesterday were phenomenal, but it's not like the stock moved like an SMCI or an NVIDIA. It's at $300 billion market cap. Is this something that needs to get to like a $1 trillion market cap? Is it that special in the AI race?
I don't know if it can get to the $1 trillion. I definitely do think it can grow a lot faster than the overall market. I think one thing that Oracle does, and it hides how strong it is, because if you look at the overall revenue, it didn't jump up by much. I don't even its overall revenue, I think, was up 3%. You have it right there, year-over-year basis. But the revenue is changing. It's going from one-time revenue to more reoccurring revenue. So that revenue that it's getting now tends to be stronger, tends to be higher margins. And as you're building more into that clouding solution, I think you're going to see that revenue growth become even higher as cloud becomes a bigger portion of its revenue. And you're also going to see margins increase, as you tend to have better margins when you have the same customer just giving you that money over time. So right now in the top line, you might be like, Oracle looks pretty weak, 3% year-over-year growth, but it's because it's changing that revenue. That revenue is going from that weak revenue to a lot stronger revenue. And I think that's the benefit that has created buying opportunities for Oracle and has eliminated many eyes on it.
Yeah, I agree. And I think them as a cloud scaler, which is or a hyperscaler to an extent, even if they're not Google or Amazon, is what's getting the market also very excited. Okay, so Oracle is up right now. It's doing very well, 12% on the day. ARM, this one I have said is a bit overvalued.
Mm-hmm.
Do you own? Well, I think you do own ARM. And what do you think about the valuation right now?
I don't own ARM, and I think very similar to you, it's a very overvalued play right now. A lot of the excitement right now for ARM is Microsoft and Windows just announced their AI PC. And with this AI PC, they have this pretty cool exclusivity deal with Qualcomm. And Qualcomm designed one of the best CPUs out there for the PC market. So everybody believes that the ARM is going to take the PC space, but I don't think that's going to be necessarily true. So I think ARM definitely has a lot of growth opportunities, but in forms of valuations, I think it's a little bit high. That doesn't mean the stock is going to drop in the next week, right? The market can continue to drive this one to new levels. I think in the long term, there might be better buying opportunities for ARM.
Is Qualcomm the one that you like here instead of ARM?
Qualcomm is definitely a good play. Qualcomm right now has definitely seen a nice price up. We've seen Qualcomm in the channel in the $100 values. Qualcomm is increasing their solutions into the Internet of Things. They're also trying to enter a little bit in the data center market. I personally prefer Qualcomm over ARM right now, but it's definitely going to be a really volatile space for both these two companies.
All right, Jose, we are seeing a lot of momentum right here. Oracle up 12% now on the day. NVIDIA here at 124. Final thing for you here, Intel. I had a friend who's joining the market close today who started buying Intel more heavily. Are you finally ready to get into this one, or you still think it's a little bit too much of a value trap?
Intel, to my opinion, the only way this one can really succeed is if it does well in its manufacturing push. I think it will do well in its manufacturing push as it's getting money from all the governments, the United States, Europe, and all the other places around the world that are building chip fabs. The only thing is it takes a long time to see that revenue. So if one gets into Intel, if I was to get into Intel, I would get into that mentality where I really won't see much change until maybe a year or 2 years from now. I think Intel might be dead money for a while, but it definitely has the potential to go up.
Okay, one last question before you leave, because I got to get your take on this one. Micron.
Mhm.
What's the TLDR on these guys? Why is this thing up so much? And are you long this one? Is this another one that you knew about that you didn't tell anyone about?
Micron is not one that I own. I don't really like the memory space, as the memory space becomes it's a very commodity product to some extent. Right now, memory, there's a special type of memory that is used on AI chips. It's called HBM, high bandwidth memory. There's only
I knew that, by the way.
There's
no,
only
I didn't. I did not know that.
There's only 3 suppliers that create HBM. There's Micron, which is the United States and the only one in the United States. Then there's Samsung, and then there's SK Hynix. Those are the only 3 players. And right now, obviously, with AI chip demand soaring, you're going to need a lot more memory, and that memory sells at a nice valuation and then a nice margin. So people are pretty excited for Micron right now.
Okay, actual final question, Jose, because you are long Tesla. Cathie says 2,600 a share in 5 years.
I mean,
thoughts on that?
I would love this, but if I was honest, the first thing I thought about is if you believe Tesla is going to go to $5 trillion, I can't imagine where NVIDIA will be in 2029. So reading a case like this, I think it actually made me more bullish for NVIDIA. I mean, pretty insane. If it happens, that would be awesome. I guess technology, for this to happen, there has to be a huge technological shift within the next 5 years. Robotaxi needs to be accepted by consumers. We need to see kind of a lot of that Optimus Prime, Optimus robot kind of really enter the market. And technology evolves, but sometimes are consumers ready for that change? So I think it's not is the technology here, but is the consumer ready to use that technology? And I think that's going to be the biggest question by 2029.
That is fair. That is a very fair point. Guys, Jose's Twitter, I'm putting in the chat right now. Please make sure to follow him. And then his YouTube, I'm putting in the chat right now. If you care about NVIDIA, semiconductors, AMD, any of that stuff, you just have to be subscribed to this channel. This is the channel that's actually going to break down. I actually watched your Path video the other day. I was in the car listening to it. So it gave me good understanding of Path and if there's any moat there. So there you go. Thank you, Jose, for being here. Really appreciate it. And we'll get you on in a couple weeks.
Thank you. Appreciate it. Oh, one more thing, if I can. I'm not sure if I'm out.
Yes,
one company I'm very bullish on right now is Marvell. I know sometimes you guys say, "Hey, I talk about."
Okay, give us the 45-second alpha on Marvell.
Marvell, they work on a lot of networking solutions, but right now they're really focusing on building custom AI chips. And we know all these big data centers, all these big cloud server providers, they want to build AI chips to kind of eliminate the need of NVIDIA or maybe some other players. I don't think they're going to ever eliminate NVIDIA, but I do believe they're going to build more chips and more custom solutions. And Marvell is definitely one that can help them along the way. So Marvell is one that I like and one that I recently started really adding into my portfolio. So that's one I'm looking for long term.
Okay, I love it. Thank you, Jose. We'll see you next time.
Thank you.
All right, so we got an update on some of the semis with Jose. Apple right here at 213, just incredible, dude. Up 3%. It topped out at 214.99. I mean, I think Apple just added about 30-40 billion bucks to its market cap after adding 215 billion yesterday. So the market's excited. The market's excited about Apple. SoFi up 5% right here on the day. Not bad at all for SoFi. ARM at 149, Oracle at 139 as well. Costco 853, Robinhood 2372, Tesla 173. Tesla's now up on the day. So Tesla went from red to green. S&P 500 542.65. 542.65. I mean, goodness gracious, dude. It's just incredible. It's just incredible. Tom Lee said 550 potentially in June. And I mean, we'll see the what's his name? J Powell's going to be talking later today and we'll see what happens. But 542 on the S&P 500. A couple of stats for you guys that you might not have heard about before. Since 2008, CPI and FOMC on the same day, which is today, June 12th, has happened 13 times. On average, the S&P has gone up 0.7% on that day. S&P right here, up 1%. It's so crazy how some of this historical stuff plays out. But on average, the S&P goes up about 1%, 0.7% on the day that CPI and FOMC happen at the same time. Today is one of those days. And that's what we are seeing right now. Again, if you're just joining, CPI came in at 3.3 versus 3.4, and that's why the market is a bit excited. Here's another stat that I want to show you guys, and then we're going to listen to a little bit more about Apple. In 2008, Apple made $378 million off the iPhone. In 2024, Apple has made $46 billion, and this is only Q1, not the full year, since the iPhone has come out. So last year was their largest year at $51.3 billion in Q1 in 2023. 2024 was $46 billion. But as you can see, the growth from $378 million to $46 billion in the matter of how many years is that? 16 years? Yeah, about 16 years. It's just incredible. And this was half of their revenue in Q1. The market thinks this is going to be probably 70-80% of their revenue by the end of 2025 as the upgrade cycle happens. Now, Jose said he doesn't think the upgrade cycle is happening. I kind of agree. I don't think the upgrade cycle is going to be massive because of these AI features, but it's going to still happen to an extent because people just have older phones and they want new technology. And if they get AI technology with it, it's a cherry on top, and that ultimately helps Apple stock, which is why Apple is benefiting off of here. Now, we didn't hear much about the Vision Pro yesterday. We heard some new updates to the developer kits for Vision Pro. We didn't hear about a new Vision Pro 2. Again, it doesn't take a genius to know that Apple's really not selling that much about Vision Pro. They barely talked about it on the earnings call. They don't give exact numbers. If you go to an Apple store, there's not a lot of people in line to try the Vision Pro. So I'm curious to see if they come out with a new version of it, or if they just ditch it and say, hey, AI iPhone, AI Mac, AI iPad, that's the future. Let's just go all in on that. I don't think investors would hate that either. And so we'll see. We'll see how that plays out. For those that are just joining as well, Cathie Wood has given her update on the Tesla price target right here. 2,600 a share she believes is going to happen by 2029. I'm trying to see if the actual ARC the letter is out because I want to see her logic behind it. But she hasn't put out the actual report yet. But it will be out. It will be out pretty soon, and we'll get to see her logic. It has to do with robotaxis. There's no other way I could imagine. Oh, it's out. It's out. It's out. Okay, it's out. Here we go. Here we go. We can actually look at it. It's officially out. It's officially out. Okay, so let's transition now to Cathie. Let's see why she thinks we're going to get to 2,600 on the stock. Okay. Oh, by the way, thank you, Think Real, for the $20 super chat. It's a beautiful day in the neighborhood. NVIDIA, Palantir, Tesla, TSM, iBit, Amit. You are the hardest working mother trucker. Appreciate you. Think Real. Thank you so much. I hated that I was gone last week, guys. I just love doing this so much. So, for those that were here yesterday in the market, we streamed for 3.5 hours. I didn't even notice we were streaming that long, but I just missed it so much. So we're back, and we got to get back into motion. And then at 2:30, we'll be back again to do FOMC. All right. So here it goes. It is out. ARC's valuation model. It is out. It is officially out. So again, expected value 2,600. If there's no autonomy, you're looking at a $350 stock. Wow. So basically they're saying, hey, if robotaxis don't become a thing, the Tesla will double, but that's it. If robotaxis become a thing, Tesla will go up 15x. So that's kind of at least the core basis of the thesis from just this chart. ARC estimates that nearly 90% of Tesla's enterprise value, and earnings will be attributed to the robotaxi business in 2029. Meanwhile, EVs could approximate a quarter of total sales and 10% of Tesla's earnings potential, as we believe the robotaxi business will have much higher margins. The charts below break down attributable revenue, even on enterprise value by business line. So they believe enterprise value should be $8.2 trillion, and 88% of that will be robotaxis. 88% will be robotaxis. Okay, so they believe, I'm looking at the bull case, 2029, they believe market cap is 10 trillion, enterprise value over EBITDA is 18 times, total EBITDA margin is 32%, gross margin is 53%, autonomous rides will make up 951 billion in revenue. Oh my God. Electric vehicle revenue will be 394 billion, and they will sell 14 million cars. To give some context, I think Tesla's going to sell maybe 1.7 million this year. They're expecting that to go up by 14 or by 7x basically by 2029. Send the link. Yeah, let me put the link in the chat. I didn't see the link for some reason in the morning. I only saw the screenshots. So here's the link. Yeah, it's in the chat for anyone who wants to see it. Okay. Percent of simulations indicating first year of Tesla's robotaxi commercialization. So their simulations say that robotaxis start in 2025. There's a 58% chance. Okay. While unlikely, if we were to eliminate the possibility of robotaxi network, Tesla stock would be $350. Note that in cases where robotaxis do not launch, Tesla could launch a human drive ride-hail service for both strategic and technical reasons. I don't think that's going to work because that's basically Uber. I think that's stupid. So it's got to be a robotaxi. It can't just be a different version of Uber. From a modeling perspective, we previously estimated that Tesla's take rate would be 40 to 6% on average, higher than Uber's 20 to 30%. This year, we fine-tuned our analysis to include that assumption. Initially, Tesla will own and operate its own network. For later years, we assume that third-party companies will own and maintain the vehicle fleet, earning 20 cents per mile from their services. So Tesla's take rate would be 80%. Wow. Tesla's arguing that 80% of the take rate will happen or Cathie's arguing that Tesla's going to get 80% on every dollar in the robotaxi network. Roaring Kitty just tweeted. Okay, hold on. Let me see what he tweeted. He tweeted something. Okay, let's see this tweet. Hold on. What did he tweeted some clip. Okay, here we go. Hold on. Here it is.
Well, we're coming back with breaking news because the live stream has finally started.
Oh,
you
boy.
can see that right there. About 28 or so minutes late, but nonetheless, it is underway. And we'll see exactly what's gonna happen there. Andrew Left's still standing by. We'll give you updates when they happen. You can judge for yourself what's going on your screen.
Oh, this is hilarious, dude. So he tweeted the clip of CNBC reacting to his live stream. That's hilarious, dude. That's hilarious. Yeah, it makes sense, dude. That was absolutely hilarious. He put that out just now. He tweeted that 7 minutes ago. That was from Friday's live stream when CNBC reacted to it. Okay, so where's GameStop right now? Real quick, S&P 542.78. GameStop is $30. It's down 1%. SoFi 728, up 4%. Apple 215. Wow. And Robinhood 2384, up 2.67% on the day. Okay, while we pushed back our median launch of Tesla's robotaxi service by 1 year, we remain confident that the service will launch within the next 5 years. With the release of FSD V12, Tesla transitioned to a neural network that learns from video directly versus just 300,000 lines of manual code. They believe Tesla will get to 1.4 billion miles of run rate on autonomous vehicles. I think they're already close to that, whereas Waymo and Baidu are below 200 million. Furthermore, our research suggests that Tesla in FSD mode is 5x safer than a human-driven Tesla shown below, 16x safer than the average car, no longer constrained by AI training compute. That is, Tesla's accelerated software updates are enhancing performance and safety. As a result, Tesla should be able to demonstrate superiority, statistically significant safety metrics, and receive regulatory approval for its robotaxi network. August 2024, they expect it's going to happen. We believe a custom cybercab is going to happen for Tesla, and that custom cybercab is ultimately going to be what gives it the value. So hold on, cybercab. Cybercab reflects increased confidence that autonomy software will allow Tesla to scale the robotaxi business. Okay, and our expected value after a flat to up year in 2024, vehicle production increases 45% a year. They think vehicle production goes 45% up a year. Optimus. We assume that Optimus will have minimal impact on our price target. Over the next decade, we expect Tesla to become a leading manufacturer and service provider of robots to move through physical space, as it will have the opportunity to leverage learnings. So their argument is Optimus is pretty much nothing to their price target. Robotaxi is the key thing that's going to get Tesla to that $2,600 price target. Our research suggests that generalized humanoid robots should represent $24 trillion global revenue opportunity, but they don't expect by 2029 that becomes a big part of their thesis. Energy storage will get to 850 gigawatts of energy in 2029. That'll be good for Tesla, but not a big part of the thesis. The big part of the thesis is robotaxi. That's what you got. It's robotaxi. This is great. You can see the disappointment in his face having to cover that. Yeah, dude, the CNBC guys they could not believe they were covering that live stream. AI as a service. Tesla's plan to offer distributed AI as a service and dojo training is probably outside of our 5-year investment horizon. So they don't think the competitor to NVIDIA via dojo is really going to happen. I also think, Elon called it a long shot, probably not happening anytime soon. Conclusion, Tesla 2,600 a share in 2029, bear case 2,000, bull case 3,100. And that's what ARK believes is going to happen for Tesla. All right, put in the chat. Do you agree or disagree? Do you agree or disagree with this? This is their price target. Do you agree or disagree? Does anyone agree or disagree? What do you think? 3,100 or even 2,600? Do you agree or disagree? Robin at 2382 right now. SoFi 725. Oracle 139. Costco 853. Meet Kevin PP 2892. SLG. Wow, SLG's up 9%. That means Open Door's got to be up even more, right? Open Door up 12%. Yep, Open Door's up. Airbnb is up. Spotify's up a little bit. JP Morgan's down. Banks are down a little bit. GoDaddy's down a little bit. Rivian's up 2%. SMLR is up 10%. Where's Bitcoin? Where's the Bitcoin stocks? Where's Bitcoin? Bitcoin is 69.5. Bitfarms is up. MicroStrategy is up 7%. Cypher is up 9%. Iren is up 4%. Hut 8 Mining's up 7%. CleanSpark's up 3%. Coinbase up 5%. Bitcoin 69,500 on the day. NVIDIA's running. Dude, is NVIDIA? Where's NVIDIA? Oh my God, NVIDIA's 125. And Apple as well. Apple's at 215. Apple's up another 5%. That means Apple year to date, Apple has clearly showed itself year to date now. Wow, up 16% on Apple. Oh my God. Tesla's the only stock that is down in the Mag 7 year to date. Apple was down 11% for the longest. Apple did a nice reversal, up 16%. And again, if you own Apple or not, it really doesn't matter. Apple being up helps the market. You want to see companies like Apple do well because the broader market, the S&P 500 is up 6%, or sorry, it's 6% of Apple, 6% of the S&P. Yeah, the S&P is going to do well when Apple's up 16%. And the Apple was getting most of its gains from NVIDIA, Microsoft, and Google. Now you put an Apple up 16% year to date. If Tesla actually does a reversal, the S&P is really going to benefit from that. So if you're bullish on the market, you want to see Apple do well. And Apple right here is doing well. Where's Palantir? Palantir 2403. So look, we're above 24. Look, my argument on Palantir has been pretty consistent for the past month. I think breaking into the 24/25/late 20s is going to require a lot of work on the growth to make sense of the valuation. Right now at 53 billion, you are paying a decent amount for Palantir, right? And so that's why I like $20 to $21 because I don't think the market was going to be generous enough to give us below 20. And I don't like buying it at 24, 25. I just think that until the growth gets closer to 25%, you are paying a bit of a premium here, right? And if you know the company, you should know that you're paying a bit of a premium. That's not being bearish. That's actually understanding what the hell you're investing in. So I thought 20 to 21 was just like a really good DCA price. I think if we consolidate at 24, that's not crazy. But until earnings in Q2 shows that the growth is closer to 25%, right now it's at 21, it's going to be tough to justify the late 20s for Palantir. So we're going to have to put up the growth, which is why, this $24 price, you're not seeing it run to 25 immediately because at the end of the day, it would get really expensive at 25. So we'll see how it plays out. But I do think we could stay stuck here, maybe even go higher. But Q2 is where the numbers are going to have to be shown. And again, the main thing about Q2 is showing that Palantir is not Salesforce. Showing that AI is actually a tailwind for Palantir. Snowflake getting a little bit of a bounce today, but Snowflake still 130, 1.8%. Snowflake's down a lot this year. And that's because the market doesn't feel that Snowflake is benefiting that much from AI. Now, maybe the market's wrong, but that's what the market feels. And that's why Snowflake's getting a little hit, which is why Palantir has a lot to show in Q2 that they actually are an AI leader. Robinhood right here. Robinhood, where's Robinhood? Wow, 2409 on Robinhood. 2409 on Robinhood. Jose just texted me, thanks for having me on. Your community is so awesome, so give them my thanks. Jose is an awesome guy, man. So definitely make sure to check out Jose. I'm putting his Twitter in the chat right now. Just such a nice guy, and he's so awesome to come on. He has a kid, he's busy, but he still makes time to do the stream. So please make sure to follow Jose if you have not. And he says thank you for being an awesome community. Thank you guys for being an awesome community. I don't know if I tell you guys enough, but thank you. You know what showed you guys were awesome? Yesterday when I had to restart the computer, all 1,200 of you stayed while there was a black screen for 2 minutes. That shows that you guys are so awesome. And again, it wasn't my fault. It was StreamYard's fault. It wasn't the Mac's fault. It was StreamYard. It wouldn't let me share my Weeble. So we're here, Robinhood 2408 right now. Speaking of Weeble, Robinhood will be announcing their new the web trading platform that maybe replaces looking at Weeble on these streams in the next coming months. I think they announced it probably on Q2 earnings. I think they're going to roll out with it. Now, I have a high bar to replace Weeble because Weeble is really good just for looking at charts. I don't know if it'll replace Weeble, but if it's definitely going to encourage people to trade on the desktop, then that's going to be another catalyst for Robinhood as well. Where's PayPal? Is PayPal red? Oh my God, PayPal's red. You've got to be kidding me. You've got to be kidding me, dude. You've really got to be kidding me. PayPal's red. This is incredible, bro. Fucking PayPal, dude. It's red. Oh my God, it's red. I'm giving PayPal till the end of the summer. I think I might as well just keep holding at this point. I do think their earnings are going to be good, and management has said in some of these conferences earnings are going to be fine. So I guess we just give it a shot. Now, they're in the rumor mill. People are saying Bill Ackman is going to unveil a secret stock that he's been buying next week. And some people are thinking it's PayPal. Now, maybe that's wishful thinking, but apparently Bill Ackman's going to come out with a new position in the next week. I don't think it's PayPal because I think Bill Ackman likes to invest into businesses that have moats. I think PayPal has a moat, but I think the moat is weakening given all the different payment options. So I don't think he buys PayPal. But if it was PayPal, it would be incredible. Bitcoin trying to get to 70,000, 69,682, trying to get back up to that 70,000 level. We'll see if it gets there. It's Amazon. I don't think Bill Ackman's buying Amazon at 180. I think if he was going to buy Amazon, it would not be at all-time highs. Even though I was talking to Steve last night, I think Steve just put out an article about Amazon. His argument is that he thinks in the next 3 years, Amazon puts up $1 trillion in revenue. And he's not that crazy because Amazon's already at like a 500 something billion in revenue. Sorry. No, I'm wrong. No, I'm right. They do about 140 a quarter. So they're close to 5 something a year. It's probably going to get to $1 trillion. And this is his article. I'll put in the chat if anyone wants to read it. If it gets to $1 trillion in revenue with operating income margins at right now 10%, which is the high since 2021, if that gets to like 17% by 2029 with $1 trillion in revenue, Amazon's not going to be at $186 a share. I mean, Amazon's going to get closer to 250, 300, maybe even more than that. So Amazon is likely going to be great for the next 5 years, but in the short term, it's already up 20% year to date. We'll have to see how much juice there's left in Amazon. But I mean, it's a no-brainer. No, Amazon's not going. I ordered, I got some new Beat headphones yesterday, some Beats Dr. Dre headphones. I think I left them downstairs. I was going to show you guys, but I bought them yesterday on Amazon. They came, dude, I bought them in the morning. They came at 3 p.m. I was just like, oh my God, this is like I will never stop using Amazon. People are not going to stop using Amazon if they can get the margin to go higher. And AWS is a $100 billion run rate business. I mean, Amazon's not going anywhere. Palantir right here, 24.16, Nvidia 125, Open Door up 12%, GameStop down 2.59%, Micron 141, Intel 31, Apple 214, SoFi 728 on the day. 2:30 Eastern, yes, 2:30 Eastern for JPOW. 2:30 Eastern for JPOW. Walmart puts up $600 billion in revenue. That's correct. Now, the one thing about Walmart is they don't have AWS, and that's why Walmart is, only $530 billion in market cap, whereas Amazon's 1.7 trillion, Amazon 1.9 trillion, because Amazon is a tech business and they have AWS. And AWS is only going to get bigger and bigger. I mean, if you believe in cloud computing or AI cloud computing, Azure, GCP, Amazon, they're going up, which is why betting on the big 7 is not crazy. I mean, I know Tesla's not done that well, but betting on the big 7 kind of just feels like a no-brainer. Any of them, take whatever pick you want. Some of them have done better than others, obviously NVIDIA, but the big 7 have been the big 7. And they've done incredibly well, and they've shown that this AI market is very real. Robinhood 23.90. You got Palantir at 24.16, SoFi 726, ARM at 150, Dell at 133, PayPal 64.35, and then you got the S&P 500, just incredible, 543, up 1.18% on the day. Wow. Pretty incredible. Pretty damn incredible. Imagine living on the East Coast. Market would open up at 9:30 a.m. instead of 6:30 a.m. My life would be completely different. Yeah, dude. When I was in California for the past week, we're gonna get to the end of the stream now, guys. I'll get to the word of the day. It sucked, dude, because I woke up and I felt like I was behind. Like I woke up at like 5:30 and I'm like, oh, it's 8:30 over there. Like all the breaking news, I was seeing it happen on Twitter and I was like, it's only 5:30. Why is like XYZ press release coming out? And it's like, well, it's 8:30 actually in the real world. California is this little fake fantasy world that we're living in. So I think California is great for a lot of reasons, but from a finance perspective, if I'm going to be covering the markets for the rest of my life, I just don't think I could ever live there, dude. It's just so weird waking up that early. Now, granted, your day ends earlier at 1 p.m., which is amazing. But I don't even think my day, I don't even think the markets could end at 1 p.m. And I would be like, what is going on, right? It's lunchtime. Like, why are the markets closed right now? It just doesn't make any sense to me. So probably we'll be in New York, or at least the East Coast forever. Okay, so let's look at the word of the day, and then I'll get you guys out of here. I'll be back at 2:25 Eastern, which is what, 11:25 Pacific, to talk about JPOW and cover the FOMC. The word of the day is dulcify.
Dulcify.
To sweeten. Dulcify. She added honey to the tea to dulcify it, making it more enjoyable. They use syrup to dulcify the bitter medicine for the children. If JPOW can dulcify the fears of not getting a rate cut, then the market's going to be pretty excited because potentially a rate cut's going to happen. And we are going to see some momentum in the broader markets. All right. That's it. Thank you for being here with me today. I really appreciate everybody being here. 8:45 tomorrow. As always, we'll be live for the market open, but 2:25 tonight. So in basically 4 hours, we'll be live and we'll see what JPOW has to say. So we'll be live at 2:25. We'll get a decision by 2 p.m. So if you're following me on Twitter, I'll just put that in the chat. You'll see, I'll tweet out the decision. Probably going to be holding rates steady and likely signaling that a rate cut will be coming either in July or September. And then 2:30, JPOW will get questioned for 30 minutes by a bunch of reporters. Last time he dropped some bars, bro. Last time he said, I don't see the stag or the inflation. As soon as he said that, I went crazy. So let's see what he has to say today and where the market ends up going. All right. Thank you, everybody. I appreciate you guys. I'll see you back at 2:25 Eastern Standard Time. Bye, everyone. Have a good one.